You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody, that music can mean only one thing. It is Education Wednesday here on the old Options Insider Radio Network. That means it's time, once again, for your favorite program, Options Bootcamp, the program for you, the busy financial, that's the show I just did, the program for you, the basic retail stock traders, maybe looking to dip your toes into these here options waters, see if the water is good for you. Maybe you want to learn how to swim a little bit better without those floaties there in the waters. Either way, we got you covered. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network. Hopefully, all of your influx of new listeners to Options Bootcamp have taken the time to, A, leave a review on your platform of choice so new people can continue to discover this program, particularly in these troubled times, and B, have subscribed to our full network, not just this show, because we will keep you engaged, occupied, enlightened, informed, maybe even entertained a little bit, with myriad of content here on the old network, hitting you pretty much every day, sometimes multiple times a day, with different shows aimed at different facets of the options market. So if you just listen to the boot camp, A, we love you, and then B, you're missing out on a whole heck of a lot. So head on over there, wherever you find this program, and make sure you get the whole kit and caboodle, which is the full network. It's a lot, but I think you can handle it. And, of course, we thought, given where we are right now in the marketplace and what's going on from an overall just the madness that has been volatility of late, we thought it's a good time to talk and do a deep dive into the mysteries of said volatility, in particular the mothership, the flagship, the VIX. My good old buddy, my usual cohort, my compatriot on this program, the black-hatted one, Mr. Passarelli, on a well-deserved break this week, off on vacation somewhere in the hinterlands of these fine United States. So we thought, who better to join me on a VIX-oriented episode than the once and future Dr. VIX himself, formerly of SIBO land, now hanging his hat over there as an instructor at Loyola, also moonlighting over there at EQ Derivatives, Mr. Russell Rhoads. Mr. Rhoads, welcome back to the program, sir.
Oh, absolutely thrilled to be here. And I didn't realize that I was giving Passarelli a vacation. And that explains why he hasn't been returning my calls. So that was helpful.
I forgot to mention author of one or two VIX-oriented books as well, sir.
Yes, one coming out we're in early August. I would say October at the latest at this point.
Oh, should be good.
I've seen it, and it looks good. It's just doesn't have a hard cover on it yet, and it's not on Amazon yet, but it's coming.
What's that book called? What's it about?
Oh, I got to look at the poster behind me. The VIX Trader's Handbook. So it's not, a lot of people have asked me if it's like just an update to the trading VIX derivatives, which is something I wrote 10 years ago. Gosh, it doesn't seem like 10 years ago. But no, this is a completely new book, mostly focusing on VIX. I threw some V stocks and some RVX in there as well. But they're actually long and short strategies that work and have been back tested and have worked historically, including low-cost ways to be in the market for the next time that we get something like this year.
Hopefully we don't get anything like this year again anytime soon, sir. But that said, it is time to head on into our first segment. It is time for your basic training.
All right, Boot, it's time to get in line. What you're going to do is learn. You're going to learn how options work. Do you hear me? Yes, you're going to learn options trading inside and out, basic to complex. There will be no failures. Do you hear me? Yes, Pull in, prepare to learn.
Love that music. So festive, regardless of what's going on in the broad market or indeed the broad globe these days. You can always count on Options Bootcamp to be a festive show. And we thought on today's basic training, since volatility has been pretty much a byword for much of what's been going on in this global marketplace these days, and usually through the lens of the VIX, we thought it was a good time to revisit and do a bit of a deep dive into that mysterious creature known as the VIX. A lot of people out there hear about it. They hear it called the Fear Index. What the heck is this unwieldy beast? Why do we talk about it so much? Why does it have so much mind share out there? Where the heck did it come from? We're going to explore all that good stuff. What does it mean? What are the different flavors of it? How can you use it? All that fun stuff. Going to dive into that on the show today. So a lot of people see that number quoted out there. Maybe they turn on a CNBC or a Bloomberg or something else, or they pick up or look at their pick up a newspaper. People don't really do that anymore. But they look at a website out there and they see quotes out there for the VIX, and they just see this number out there, which as of today, it actually is drifting back down. It's been stubbornly north of 30 for a while. Then it's been hovering around 25 for a while. Now it has broken through that. It's at a 2290, off nearly a full point coming in to start the show. Of course, back in the teeth of the madness, in the teeth of this pandemic, it spiraled north of 80 back in the mad days of March and has been slowly, ever so slowly, drifting down ever since. So a lot to unpack. But Mr. VIX, Mr. Rhodes, the once and future Dr. VIX out there. I can't think of a better person to have in my co-drill instructor seat today, because you spent some time over there in the hinterlands of said SIBO. So let's start there. Give our audience a little bit of a history lesson of what the heck is this VIX? Where did it come from? When did it start? And how has it evolved over time, sir?
Goodness gracious, it's evolved. I could spend a whole half hour on how it's evolved, so I'll try to give the Cliff Notes version. VIX was created, I want to say over 20 years ago now. And it was actually created, and a lot of people try to take credit for it and everything, but the person that SIBO wrote a check to and sent off to come up with a volatility index was Dr. Robert Whaley, who is down at Vanderbilt and is kind of the father of VIX. What he was doing was he was trying to come up with a standard method of displaying implied volatility. Implied volatility is impacted by a lot of things, and one of the things it's impacted by is how much time do you have left to expiration, because the implied volatility is all about the volatility projections looking forward. So he came up with a pretty basic method of calculating VIX. It was based on, and I'll bet you if I just gave the ticker, 90% of the people listening wouldn't know what I'm talking about.
If you say OEX today, people are like, what the heck are you talking about?
I'm going to say OEX, and then I'm going to tell you what it is. So OEX options, which if you ever see the really cool black and white pictures before the exchange turned color of everybody trading options in a giant pit, they were trading options on something that we all call the OEX. It's now called the S&P 100, but it was the most active option contract out there. Then SIBO and Standard & Poor's came to an agreement, and options started trading on the S&P 500, and over time the volume totally shifted over to the S&P 500. We still do have OEX options, but they don't make any of those lists of most active options anymore. So using the index options, and initially I think we were only using 8 contracts, the 8 nearest at the money contracts, 4 for one expiration, 4 for another expiration, and time weighting all of those into basically a 30-day projection of implied volatility. I would say that the original VIX, which is still quoted using the ticker VXO, you can still find data on that, is a better measure of at-the-money implied volatility than implied volatility across the whole strip of S&P 500 index options. And that's what VIX does now. We switched over to S&P 500 options, added many strikes, went from 8 to sometimes typically between 150 and 200, depending on how many are being actively quoted over 2 expirations. Initially, we were using the old school third Friday expirations to average down to 30 days. Now it's the Friday before and the Friday right after a 30-day time frame. So they, as we referred to it, and I was at SIBO when they made that change, the enhanced version of VIX uses options that expire just before 30 days and just after 30 days. There's still a close relationship between what is now quoted as VIXMO, VIXMO, which uses the old methodology so you can do a side-by-side comparison, and the newer and current methodology. But that's how we got to where we are now. S&P 500 options, a bunch of options that expire somewhere between 28 and I think not 28, 23 and 37 days, and you jumble those all together and you get a standard 30-day implied volatility as indicated by market pricing for the S&P 500.
You're the second person in as many shows back-to-back now to maybe imply that maybe the old school VIX was a little bit better measure. We just had this conversation on our Advisors Options show as well.
I wouldn't say better. I would say different. I think if SIBO had gone to using, and basically you're using weeklies for some of the calculations, if you had gone to that earlier than they did before there was really good liquidity in the shorter dated options, it might not have been as good a measure, but I think the timing was pretty good on that. It's a better measure of 30-day expectations than VIXMO would be. VIXMO is just really good because you've got more history, and if you're doing like I'm working on a paper right now where I'm comparing different volatility indexes, and I think we'll talk about some of those, to VIX. And because the other volatility indexes still use standard options and don't incorporate weeklies like VIX does, I like to use VIXMO for those reasons.
Touched on a lot of things there. You mentioned the legion of VIX fathers floating around. I lost track of how many people I've talked to who have claimed some sort of parentage of VIX over the years, Mr. Rhodes. But you're right. Dr. Whaley is kind of the one who's widely credited out there. But as I always say, success has many fathers. Defeat is an orphan. VIX is an unqualified success. Maybe less so now. We'll get to that maybe in a little bit. But in general, a lot of people want to be a part of that. So a lot of people out there have some sort of VIX parentage on their LinkedIn profile. So be dubious of that when you see that out there, listeners. And you're right. This thing has morphed quite a bit from the old days when it was just an abstract index that was quoted. You couldn't trade it. It was just an abstract number that was quoted on the front month at the money OEX. And I just pulled it up while you were talking, Mr. Rhodes. Let's just play a fun side game really quickly. The OEX, of course, which is the S&P 100, listen, which used to be the go-to pit in SIBO land, not so much anymore. Guess what the ADV of the OEX is these days, Mr. Rhodes?
I'm going to say 1,200.
Wow, you're generous. Try about 1/3, really. It's
really
shy of 400 contracts, 392 contracts right now. So, man, the mighty have quite literally fallen in this case. No one really talks S&P 100 anymore. So that was one of the reasons why they modernized VIX to make it to a more relevant index now. Now it's the at the money plus of the S&P 500, a.k.a. the SPX, a.k.a. an index more of you are familiar with and more widely traded. And that was one of the first real steps to bring VIX into the modern era. Of course, you still couldn't trade it. You had to wait till about 2004 for the futures to be launched. And you still couldn't trade options. That took another couple of years. Everyone thinks of VIX as this lightning in a bottle, immediate success story. And yet it took a long time for this thing to percolate and catch mindshare. And even 2 years after the futures launched, before the options were viable out there. So there have been a lot of tweaks to VIX when they, quote-unquote, modernized it back in those days to launch the futures in 2004, as Mr. Rhodes alluded to. They added a few other components, things that I've always kind of championed, but other people have. We had Mr. Hausman, the director of risk over there at Swan on our last show, the Advisors Option, arguing that maybe they never should have added the skew. Of course, what they did to make VIX maybe a little bit more reflective of the entirety of the month's volatility, not just the at the money, was they added a little bit of the call wing, a little bit of the put wing, and that's where some of the interest has happened. Also, maybe where some of the problems have come for VIX. If you look at the litany of lawsuits that have surrounded the SIBO in recent years, a lot of them have alleged that the puts in particular have been used to try to manipulate the index around settlement time, with large amounts of otherwise valueless options being traded to try to manipulate where the VIX index settled. And there has been quite a few lawsuits about that of late. So it's an interesting area. So maybe some people might argue those tweaks went a little bit too far, but either way, the VIX itself is a much different beast these days than it was, and as Mr. Rhodes alluded to, they've added even more recent tweaks to incorporate weekly options out there to get a little bit more flavor in your VIX. Now, a couple very common misperceptions float around the VIX, particularly for this audience. One of the most common ones out there is you see this number quoted on Bloomberg, quoted on CNBC, quoted on website X. You say, oh, the VIX, like I said, right now it's about a 2290 or so. Okay, I want to buy it. I want to buy that 2290. How do I do it? How do I buy that 2290? Short answer to that question is you can't. You can't just go out there and trade the cash VIX index. Many people have tried, including the aforementioned Professor Whaley, trying to take a tilt at that with some products like VIX up, VIX down. But at the end of the day, the short answer to that question is you cannot trade the cash VIX index itself. It's still just an abstract number. Now, what you can do are trade the futures based off that index. And those, of course, are the big VIX futures. If you're scared of futures, maybe that's an intimidating prospect for you. And then, of course, if you want to trade options on that, there are the options on the VIX futures. So if you're going out and buying an option in a few months on VIX, it's not on that 2290. It's on whatever the future is for the month you're buying that option on, which is probably, Mr. Rhodes, would you say that's still the number one misperception out there about VIX, that you can't just go out and scoop up the cash index directly, sir?
God, yes. And I'm amazed that everybody's got to buy my book. Isn't that shameless? But no, a couple of weeks ago, VIX was acting a little funny. It was up when the S&P 500 was up. And, somebody that fashions themselves some sort of expert decided that they were going to say, well, it's expiration week. So the spot VIX is working as it's closing the gap. And I just didn't even want to engage in that argument anymore. I just decided that if people want to remain that ill-informed, I'm cool with that. I'll just trade on the other side of them. But you can't when the VIX future does drift down to VIX as we approach expiration, but it's a matter of price change for the VIX future. It is not there's no price activity going on that's making spot VIX move toward the future. It's the future moving toward the VIX. I think the best illustration is in the S&P 500 world, you can buy the S&P 500, you can replicate the index in a bunch of different ways, and you can trade the futures against that portfolio. You could sell the futures and buy a bunch of stocks that give you the same performance as the S&P 500 and make money as those two numbers converge. You can't trade spot VIX. If you figure it out, let me know. I will help you put everything together to make money off of it, and I will only take 5% of the profits, and I'll still get to buy myself an island and disappear.
I was going to say, you have a nice island if you get that 5% of whoever can crack that nut, which has proven elusive. All right, now that we've kind of set the table for you, explain what basic VIX is, let's mix it up. Let's get a little bit more confusing out here, because VIX itself, as Mr. Rhodes alluded to, is pretty much that 30-day prognostication for what volatility is going to be 30 days from now out there in the S&P 500 with all those various tweaks that we mentioned, a little bit of the skew, some of the weeklies mixed in, all that good stuff out there. But it's not the only flavor of VIX, not by a long shot. In fact, this probably surprises a lot of people, but you can actually go out a full year pretty much with various VIX calculations. Now, I say calculations because you can't really trade all of these, or really most of them, but they are being disseminated out there. So if 30 days isn't going to float your boat, you want a VIX of a different time frame, maybe they got you covered. You can go as early these days as 9 days if you want to get out into the volatility of the weeklies. And some may argue that's a very meaningful measure. Massive proportions of equity options volume go up in the short duration contracts these days. So VIX 9-day is certainly an interesting measure out there. Then you go out to the 30-day, which is, of course, VIX. And then you go out 3 months to the VIX 3-month calculation out there. Then you go a little bit beyond that to 6 months. And if that's not far enough for you, there's even a VIX 1-year calculation. We had an interesting discussion about this on our Volatility Views program recently, talking about what is someone termed the cash VIX term structure. I had never thought of it in those terms before, but when you see it laid out that way, it does make sense. Of course, you can also trade VIX on other indices. If you're tired of S&P, maybe you want to go a little NASDAQ. Well, they got you covered there. There's VXN. Maybe you want to go to the old school Dow. There's VXD on the Dow. Or, of course, our old friend on the Russell 2000. Talk about this every week on the TWIFO program. That's RVX. That's the VIX of the Russell 2000. Now, we're hoping for products like RVX to come back into a tradable format. Right now, it's still abstract quote only out there, but there are other flavors out there for you to sink your teeth into. Mr. Rose, do you find this surprises people when they learn that not only are there other terms they could look at VIX in, but also other indices, sir?
Most people just aren't aware of when you get beyond VIX, which is unfortunate because a lot of information can be garnered from looking at, and my favorite one, and I steal this one from Larry McMillan, my favorite one is VIX versus VIX 3M, which I wrote a paper on it a while back when the ticker was still VXV, Victor X-ray Victor. But the 3-month VIX is a really good guide sometimes as to what's going to happen with VIX. In fact, VIX is supposed to be a indication of what the market thinks is going to happen volatility-wise over the next 30 days. If you create a model and you combine VIX and VIX 3M together, you get a better forecast than VIX by itself. Also, because VIX 3M is kind of leads VIX around, when VIX is at a premium relative to VIX 3M, you can get an idea that maybe it's one way to say that maybe VIX is overbought or maybe even oversold if it's fallen to too much of a discount relative to the 3-month VIX. So I think those two together are great, but all 5 of those give us an excellent tool to look at a full year's term structure using various volatility indexes. You can try to do that with the futures contracts, but the futures contracts, just like when you're trying to look at implied volatility of just one expiration of options, the futures contracts are being impacted by how much time you got left to expiration. These 5 indexes are not really impacted in that manner. The 9-day VIX is very volatile. And also, one thing that you have to keep in mind about the 9-day VIX is there is a bigger weekend impact. All of these indexes are calculating the number of calendar days to expiration. So, if you've got, if you're on a Friday and you've got a couple of weekends in there, or you've got a 3-day weekend, the 9-day VIX actually is influenced a little bit more than that, than the other 4 of them. So I like the other 4 together. VIX 9-day is pretty good. I've done a lot of work and I could never find a really good use for it. And then I really do like to look at NASDAQ volatility versus VIX, and of course the Russell 2000 volatility versus VIX. You got VXN, you've got VolQ as well, which is a little bit different methodology that gives you NDX expected implied volatility. And as far as products go, don't be shocked if something gets introduced on that one before we get maybe the Russell 2000 volatility futures back at some point.
Interesting points about the cash VIX term structure. Like I said, we just discussed this on Volatility Views, and I wasn't that embracing of the listener's point that he thought there was some information in the cash VIX term structure, because I always said you can always find most of that in the VIX futures themselves, and they're a tradable asset at the end of the day, so I like to rely on those more. But might be some interesting ratios to explore there between the VIX and the VIX 3-month. In particular, if you want to go beyond just the shores of the U.S. here, listeners, there are other flavors of good old VIX out there. There's the VIX EFA ETF, VX EFA. There's the VIX Emerging Markets ETF, which is, of course, VXEEM. There's the VIX China ETF, so that's VXFXI. And then they've got to go to Brazil as well, VXEWZ for effectively the Brazil ETF VIX. And, of course, it's not just equities. It's not just looking at the indices. It's over there in the commodity space as well. There's OVX, the last of the Mohegans now out there in the energy VIX space, which is, of course, the VIX of the USO ETF. There used to be OIV, which was a very popular one. We talked about a lot on TWIFO and many other programs, which was the VIX of WTI. That came under some pressure, shall we say, back when crude oil went negative, and OIV has never really returned yet. I'm trying to get some confirmation from the SIBO on if we'll ever see that again. We're supposed to have Ariane from the SIBO on yesterday on our interview program to discuss that and a lot more, and unfortunately the hurricane wreaked havoc with our plans. But we'll get her back on to discuss that and RVX and a lot more on a future episode. If you want silver, VX SLV Good old gold miners is VXGDX. There's the GVZ as well, which is the gold ETF, the VIX of gold itself. And good old VXXLE, a little less heralded one on the energy sector. I guess you can guess which ETF that one is on. And these are some of my favorites, Mr. Rhodes. These kind of get forgotten. These were announced by the SIBO with great fanfare a number of years ago, and I thought they were going to be a home run, and they never really materialized everything. We saw these single-name VIXs. Yes, there are a handful of big stocks that actually have their own VIXs, listeners, including Amazon, VXAZN, Apple, VXAPL, Goldman Sachs, for some interesting reason, VXGS, the old Google, VXGOG, and IBM. I think if they were going to announce this today, they may change some of those names out there. I do believe those are still disseminated, because I do believe folks like Options Express, now Schwab, use that to calculate some of their premium harvesting indexes out there. But still interesting stuff. And if you like all the vol, you want to see how much VIX is actually moving, that's our old friend VVIX, VVIX. So a lot to unpack there. Mr. Rhodes, are there any of those other flavors, energy, or maybe single names or anything else that we've forgotten to add to this list, sir?
Nothing you forgot to add to the list. I've always liked GVZ. I've always felt like it does a really good job of highlighting some of the macro risks or macro outlooks that go along with gold. OVX, just because it's based on the USO options, I have a hard time with that one. I miss our old buddy OIV. I always felt like that was a much better one to keep an eye on. I'm kind of bummed they didn't do more volatility indexes on single stocks. I've actually, luckily in my role at Loyola, I have access to a Bloomberg, and you can get a consistent 30-day at-the-money measure for anything that has options on it. So I use that which is pretty close to the old VXO calculation. So I use that pretty frequently. I really wish there were more stocks. I feel like it would be great to have the 2 or 3 most actively traded options, not necessarily the biggest companies, but the ones that have the most actively traded options in each of the 11 S&P 500 sectors, and be able to do an even better dispersion type index with. I was going to say, I know I just jumped 5 levels up on a lot of people when I said that, and I kind of regretted it when I said that. But it would be kind of neat to have more of them. You just need to have a consistent option market, and once you jump down from like 40 or 50 stocks, you might have some liquidity issues when you're trying to calculate and continuously disseminate a volatility index on the individual stock options.
Certainly indeed. And of course, we'd be remiss if we didn't mention, of course, some of the alternatives to VIX out there. You probably heard of one on our Volatility Views program every week, which is Spikes. And what is it? It's just the VIX of SPY, or VIX on SPY, I should say. Remember we said before, VIX started on the OEX, then migrated to the SPX, and now we're seeing a similar flavor out there in SPY land. Why is that better? Well, perhaps you like SPY, you follow SPY more. It's obviously a more widely available product out there. It's not listed on a single exchange. Also, they have incorporated some elements which they term price dragging to try to mitigate the impact of that, shall we say, carpet bombing on the puts around expiration and settlement. So they hope to have solved that problem as well. So it's a multiply listed asset on a cheaper name like SPY that most of you watch that is listed on multiple exchanges. So if that appeals to you, and it certainly seems like it's starting to get some action, particularly when that future comes back, that might be interesting for you out there as well. And of course, the VIX ETP space is exploding out there as well. VXX is probably one of the most popular out there. It attempts to provide some exposure to volatility, tries to replicate that VIX future, does a middling job of it. Of course, it suffers from that negative roll yield as a result, so beware of that. VXX, not one you want to buy and hold for the long term. Our old friend TVIX, one we malign quite a bit here on this network, and it now has pretty much gone the way of the dodo, so that one not an option anymore, pun intended. And never was optionable, so there never were options on it to begin with. And then, of course, good old UVXY and SVXY, the twins out there, they were interesting players, now kind of neutered somewhat. Mr. Rhodes, that the VIX alternative space is growing all the time. What are some interesting ones on your radar out there, sir?
Well, we've got a couple. It's not a direct replacement. I hate to call it a replacement because I think everybody believes that the TVIX issuer is just going to reissue a new TVIX. But there is a leveraged long one coming, and there is an unleveraged short ETF in the pipeline, which I think the short one should be out by the end of the year. I get I have a tough time keeping up with the SEC's approval process behind ETFs and the timing of them. And I don't know if the timing has changed because the people at the SEC don't go into offices anymore. But we'll have this time next year, which is making sure that I'm getting it right. We should have a new XIV, which I think it's actually going to be XIV. Maybe that's going to be the ticker. I can't remember for sure. But we're going to have an inverse one, and we're going to have a 2 times one back in the marketplace. And the cool thing is, in the past, most of these have been ETNs. The 2 that are coming out are going to be ETFs. And when they're ETFs, that means that, according to their prospectus, they need to be in the VIX futures market every day. So some of the drop-off that we've seen in VIX futures volume, I do think part of it's going to come back as we get to a lower VIX, but even more of it, I think, is going to come back as we get these 2 new products out, because the ones that went away did not go away because people weren't trading them. It's not like somebody's trying to replace a failure. Just somebody's coming out and taking the place of something that was doing particularly well. So I'm looking forward to both of those coming back out.
I'm looking forward to more shows. Unfortunately, that music means we come to the end of this one. Quick recap here for you listeners. Of course, VIX 30-day implied volatility out there on the SPX now has had a interested, long, and sordid history. Many different flavors out there. Many alternatives now as well. There's, of course, Spike, S-P-I-K-E is the ticker out there. VXX on the ETP side if you want to trade more on those ones as well. TVIX kind of going the way of the dodo. Mr. Rhodes alluded to potentially the return of XIV. I think they're calling it SVIX out there, so that should be an interesting one to watch. Potentially a new TVIX, an analog, I guess you can call it, on the horizon out there as well. UVXY and SVXY still kind of managing to struggle along out there if you like to prefer to play in those places as well. Of course, we're going to talk with the CBOE this week about the launch of their upcoming mini VIX futures, which should be launching this Monday if things can maintain on their course right now. We'll see. So that adds yet another new flavor, another new duration, another new size to the VIX ecosystem. So the volatility space is an interesting one. It's always evolving. Sometimes it's confusing. That's why we're here to help you, listeners. And Mr. Rhodes, before we go, if folks are intrigued, you want to check out your books or read some of your articles, where should they go? What should they do, sir?
A big portion of what I write shows up on EQDerivatives.com. Whenever I'm writing about actionable things within the marketplace, I always pull them out from behind that nasty paywall. So, and I only tweet things that are not covered by the paywall. So, probably whenever I do anything, whether it's market related or not, it seems to show up on Twitter. So that's the best place.
There you go. Give him a follow on the old Twitter is there. He's at Russell Rhodes, 2 S's, 2 L's, and it's RHOADS over there. And on behalf of Mr. Rhodes and our buddy over there, Mr. Passarelli, who's on vacation, and myself, the show never stops. We got more coming for you, so stay tuned. If you got questions, we're going to answer them coming up really quickly on the next episode of Options Bootcamp.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.